Hey everyone, Couch Investor back to another video for today. So this will be the first time that I cover the company Ulta Beauty. Now Ulta Beauty has been down 25% or so since their May highs. There is a reason for that, a bit of a weaker earnings report. Margins have come down, growth has slowed down as well. Increase in theft is a topic that we've been hearing a lot in the latest earnings season as well. So let's have a look at the company's state right now. $20 billion in market cap. Year to date, it's down 11%. But as you can see, over the years, actually here you can see over the past 10 years or so, they have increased their revenue, they've increased free cash flow. Return on equity in the last 12 months sits at over 66%. Gross profit margin has also increased over the years. But as you can see, it has been coming down a little bit in the last couple of quarters. And then return on capital, last 12 months, 27%, in my opinion, is quite good. Now, if we want to compare further metrics, PE, EV to EBITDA, price to sales, and price to free cash flow, and compare it to the mean of the last 10 years, we can currently see that on all metrics, it is below its mean. So PE sits at 15.8 times in the next 12 months, much lower than the 26.7 times in the past 10 years. As for EV to EBITDA, right now it sits at 11.3 times compared to 14.2. Price to sales sits at 1.8 compared to 2.3. And then price to free cash flow, 21 times compared to 52.4 times. So you could say that right now the company is undervalued based on past valuations. So what does the market say currently? So for fiscal year 2023, sales growth 18%, fiscal year 2024, 9.2%. Then you see here the deceleration. You can already see why there might have been a re-rating for this stock. Fiscal year 2025, 4.67%, and then fiscal year 2026, 5.42%. Now, if we go and look at EPS, by the way, this is on Coifin. If you want to try it out, there's a link down in the description below. For EPS, fiscal year 2023, 33% growth, and then here again, huge deceleration, only 6% growth in fiscal year 2024. Same thing for fiscal year 2025, and then for fiscal year 2026, we can see some reacceleration there, 9.13%. But with the recent drop in the stock price, we currently have an average price target of around $522, which means that the return potential sits at 25.6%. Now, since Ulta Beauty is in the beauty industry, how is that doing? How is that going to be doing in the coming years? So the four main beauty categories are projected to grow in the next 5 years. Global beauty market, retail sales by category, fragrance, makeup, hair care, and skincare are all expected to grow mid-single digits up until 2027. And if we look at the channels, you can see here that e-commerce is the fastest growing channel for beauty products. Now, of course, there are many other companies that are in the beauty industry. There's Sephora, there's LVMH, there's even Amazon that's in that industry. So everybody is playing a bit of a role there. But as we've seen the last couple of years, revenue has gone up. We've seen free cash flow go up. Yes, gross profit margin has come down a little bit, but over the last 10 years, the trend is on the way up to the right. So let's have a quick look to what the latest earnings report taught investors. Now, before we jump into that, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. We're really close to reaching 30,000 subscribers, so thank you very much for all the support. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So the results for the recent quarters. Net sales of $2.5 billion compared to $2.3 billion a year ago. Comparable sales increased 8%. The net income was $300.1 million or $6.02 per diluted shares. And the company raised outlook for fiscal year 2023. Now, if you look at the operating income here, you can see that it is down year over year. We're now at 15.5% compared to 17%. And new store openings were down to 3 compared to 7 last year. Now, if we go and look at the fiscal year 2023 outlook, we can see that it has increased a little bit when it comes to net sales, comparable sales, then operating margin increased a tiny bit from 14.5% on the low end to 14.6%. Not a lot, but hey, it's better than nothing. And the same thing for diluted earnings per share as well. All the rest remains the same. Then looking at the graph here, of course, you can clearly see two big red candles. That's when they reported earnings. Now, this area here between $400 and $415, does seem like a nice little support line where we could see the rebound continue to happen here. We already see here a good green candle as a positive reaction. In the past, this was a resistance, but then we broke out back late 2022. We already had a little rebound there back in May. This could be a nice little area to add or open a position for long-term investors. That said, MACD right now is still pretty bearish. So if you were on the lookout for a new company to study, to add to the portfolio, I think Ulta Beauty could be one of those companies. There aren't many great companies that are down year to date because 2023 has been quite a good year for most stocks. Now, those that are down, usually there is a big reason for that. Financials are struggling, the business is struggling as well. With Ulta Beauty, yes, we've seen margin go down a little bit, but we are already seeing some good momentum with the company. Of course, still keep an eye out on those margins, still keep an eye out on those negative comments when it comes to theft. We've heard that before with many other retailers out there as well, and especially keep an eye out on their innovations. How can they become more profitable over time? How can they become even more popular over time as well? And I think you'll do quite well with a company like that. I know it's not a high-tech company. I think $20 billion, there is quite a significant upside for the long-term investor there. Of course, do share your thoughts down in the comments below. Do you hold this company? Let me know down in the comments. And if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I see you all in the next one. Bye-bye.